One. Alrighty, ladies and gentlemen, welcome. As always, it is my pleasure to bring you another Ask Me Anything, Ask Us Anything with the Wolves of Wall Street. I am Nexus, your host, and we bring you today Bourbon and Blockchain. Quite a combination, if you asked me. Super curious project that purports to have both a combination of social club and support services infrastructure to which monthly rewards are accrued. As always, the information contained in this program is not financial advice, although I know that's not going to protect me. In the end, we're all here stating our opinions. Take that for what you will. And with that said, our opinions do not necessarily represent the entirety of all opinions of either the Wolves of Wall Street or the team at Bourbon and Blockchain. And with that said, we welcome Draco and Mr. Maverick from Bourbon and Blockchain. How are you guys doing tonight?
I'm doing great, and after that intro, I feel even better. That was awesome. So that was a really good intro, bud.
Yeah, thanks for having us, Nexus. We're super excited about this and getting in front of your community and talking shop with everybody. Everybody's super interested, and I see a lot of intricate questions that have come in. So really glad to help clear anything up that we can.
Absolutely. It is a tumultuous time in this space. But before we get into sort of the meat and potatoes of what's going on there, I'd like to ask you guys to tell us anything about yourselves that you feel would help us get to know you and your team.
Sure. Hey, I'll kick us off, Draco. So, hey, my name's Brian Jones. I go by the name Mr. Maverick. If you look deep enough, you can actually find me on LinkedIn, but I don't mix my Web3 life with my personal life, and I have a 9-to-5 like many others in the crowd, I'm sure do. And that is, I have been in oil and gas for the last 17 years of my life. Graduated from University of Texas. I live in Texas, and hence we'll talk a little bit more later on, I'm sure, when we talk about utility and how, the partnership with the distillery and how that came about here in Texas. And it was kind of an organic way. But yeah, that's me in a nutshell. I have a family, 3 children, wife, live in Texas on about 40 acres.
And then I'll introduce myself. My name is Draco. I started off my crypto journey solo, kind of doing it by myself, and then I hitched up to a group called Cryptonaires. I'm sure some of you have heard of Cryptonaires. I was actually part of their launch and helped them launch Cryptonaires. I was a lead for that group for doing research into projects and project analysis, and I also conducted their interviews at the beginning of the project for Cryptonaires. I conducted all of the interviews with developers and project leads. For a little while I did that, and then eventually I sprung off and kind of started my own thing, and we started Bourbon and Blockchain Services, and that kind of is what led us to where we are today.
All right. Before we go any further, let's dispel with some popular and unpopular notions about NFT technology with respect to this project. How does this project's NFT differ just as simply as possible from all of the other ones out there?
Yeah, that's a great question. I'll take that one, Maverick. So our project is utilizing NFTs for the simple purpose of how they were created. NFTs originally had the idea of serving a purpose to digitize or tokenize an asset. And that could mean digitizing or tokenizing simple things from your marriage certificate, your driver's license, your home insurance, things like that. That's how it was originally intended. So we're taking the NFT and actually using it for its original intention, and we're creating an NFT that actually represents the club membership to Bourbon and Blockchain. That's actually what it is. Now, obviously, when NFTs initially hit the cryptocurrency atmosphere, the artwork was very popular because that was the easiest way to kind of put it on Web3 and have people, give it value, right? Its own value based on what the artwork was. So we didn't want to go ahead and throw that completely aside. We created really amazing artwork with our NFTs, But that's not the entirety of our project. All the NFT is the membership portion of it that people can buy, sell, trade, but it also gives them access to our decentralized application and allows them to claim rewards. The rest of the project is all, part of the actual protocol and what we're actually doing with our smart contract and opening the validators and collecting the rewards. The NFT is just the membership piece of it.
Okay. Is there anything that the other gent wanted to add? Just checking.
Yeah, no, all I would say is that it has been difficult because it's pretty amazing in the space how when people just see NFT, they think of your classic NFT artwork style project. Just like Draco said, the intent behind the NFT with regards to Bourbon and blockchain, simply put, is the means for all the club members to participate in the off-chain piece, which we'll talk a little bit later on, which is the Bourbon, as well as being able to reap in the rewards of the validators and other consensus mechanisms that we're going to be establishing. Yeah, that's how they will be dispersed to those NFT holders. So yeah, true utility. Now, I will say, Nexus, we did not skimp on the artwork, okay? I'm not sure if you had an opportunity to look at them, but we outsourced an artist. He's actually from Brazil. His name is August. He's in our Discord, and he is a 3D, like hyper-realistic graphics designer. Yeah, wizard's a good way to put it, Draco. So we definitely wanted to pay homage to what an NFT is supposed to, or what people see it as from other spectrums. But really, that's just something that we want people to be proud of, right? You see the NFT is beautiful. It's a cool piece of artwork. But really, that's not the purpose of these NFTs.
Okay. Copy that. How did this project evolve out of its social club origins to become what sounds to me right now, at least, like a node management service?
Yeah, that's a good way to put it. So we started off as a social group, and what we attempted to do initially was put a large group of people together that were like-minded thinkers, people that were looking for cryptocurrency projects that were good cryptocurrency projects that were long-term, that had good tokenomics or good, processes of which they were operating in the cryptocurrency atmosphere. And what we were doing is setting up a group of people that would be able to communicate, and that's the social group portion of it, where people could come and talk about crypto, because not all of us talk about crypto in our personal lives, in our 9-to-5s or in our day jobs, right? Not everybody that surrounds us personally is into crypto. So we created a space initially where people can all come together and talk about crypto. And if you were an adult and of 20 years of age or older, you could participate in an adult beverage and have a relaxed atmosphere to talk about cryptocurrency, kind of like you were at like a bar or something like that, where you could kind of discuss different projects and have fun and create relationships and friendships along the way. We had a large team that we were developing to do the research and to find the different projects and make sure that we were doing thorough research into the projects. But then the whole market took a really bad nosedive, and it kept going down, down, down. And what we found is that it was more and more difficult to find projects. Just like you guys are looking at projects, it was very difficult to find projects that were hitting all of the marks that we set in order for us to present them as good or sound investments or good projects that were doing good in crypto. So after a long time of looking at several failed projects and failed models and not being able to find a ton of projects that hit that mark, we started to talk and say, hey, maybe we can look at all of these things we've discovered over the past 2 years and compile them together and create a project that does work, because we've seen what actually works. We've seen yields that actually pan out. We see reward systems that pan out. We see that, using leverage and loans does not work. So we can take all of these different types of ideas and we can apply them to a project that we can create and that we can manage and see where that takes us. And that's really what got us started on working on Bourbon and blockchain services. We started actually developing the project and talking about the basics of it in June of this year. In July, we started formulating the base of it, and we pretty much started taking off from there.
Okay. All right, before we dive into the rewards and tokenomics, I have to ask, what blockchains or tokens do you guys support today and or plan to support in the future? Both. I want to know both.
Maverick, do you want that one, or I can take it? It doesn't matter. So right now, we don't support anything. We haven't launched the project completely, right? So we're in the minting phase. We start to mint actually coming up here on Black Friday on the 25th. That's when we start to mint. And the project will actually exist on the Polygon blockchain. So the NFTs will be minted on the Polygon blockchain, and they will stay on the Polygon blockchain, and you will connect to the dApp on Polygon. When you mint, you will actually be minting in USDC. We decided to make the contract a little bit more robust and have 2 transactions where you're actually minting in USDC, so that instead of having to move all of your funds on Polygon and guess where Polygon's going to be on the day of mint and maybe have too much or not enough tokens, we decided to do it in a stable coin, so it was much easier for people. So if the market did move around, you'd still have the stable coin available to conduct that mint transaction. When it comes to what we're going to be supporting in the future, it's a fairly large list. So what we plan on doing as a project is supporting proof of stake consensus mechanisms. That's pretty much what we're working with, right? So in order to work with proof of stake, there's several different projects that are using proof of stake, but not all are the same, right? They don't use the same mechanisms. No. So some of them are where you're going to use validation nodes. So we're going to be opening validators. Like Ethereum, we're going to be opening up Ethereum nodes and AVAX nodes, a Polygon node, a Phantom node. So we're going to be working with different large blockchains like that. But some of these blockchains just use staking. Not all of them have validation nodes. So we'll be doing staking and on-chain staking, and we'll also be doing delegation to nodes that we can't get. So some of these different types of projects will have it where you can only have 100 validators total. And if you're not within that validator list, you can't have a validator, or you have to be approved to be on that list. And some of them will have like a token number. So you have to have more than 4 million, but the last one has 5 million tokens in it. So unless you have 5 million in one token, you can't have the validator. So that'd be a really high entry to that validation system. So that's not something we jump right into. So we would do delegation until we earned the amount of tokens we needed. So just like a quick rundown of different projects that we're working with. We're looking at the top projects that have already been here and that are proving themselves even in a bear market. So we're looking at projects like Ethereum, BnB, ADA, DOT, Matic, AVAX, Link, Atom. We're looking at Algo, HBAR, Flux, Near, Elrond, and we're even looking at some flyers that haven't been completely established but that have high rewards. But we would be putting a lot less of the funds into that because they're not completely proven yet. So we're looking at different projects like DAG even. And on top of that, we're also able to participate in working with DEXs. So I think working with a DEX is really important right now with this type of environment that we're in because of the centralized exchanges.
Agreed.
So we actually have a few DEXs that we've partnered with where we'll be able to provide liquidity pools to support their DEX, because ultimately supporting a DEX ultimately supports blockchain technology. If you can't get your funds off and on and swap your funds, then blockchain technology won't exist. So we'll be able to participate in that as well.
Okay, very cool. All right, well, in that case, let's dive right into rewards and tokenomics. You guys describe in plain language how the reward scheme for holding a Bourbon and blockchain NFT is going to work.
Yeah, hey, I'll take this one, Draco. Sorry for the pause. Sometimes I'm too polite and dead air.
That's what I do.
I know, it's right. Hey,
go ahead, you got it, Maverick.
Yeah, exactly. But yeah, I'll take this one. So, hey, initially, all funds that are raised through the sale of these NFTs are then going to be dispersed amongst validators, right? And the validators are going to vary, and they're all going to vary initially based on the allocation and how quick we mint out, right? That's going to help us decide, and we're going to have to be a little dynamic on how we deploy the funds initially. But so once we start deploying funds, the NFT holders at the end of the month will be able to log into our dApp and claim their rewards. Now, those rewards, the way that it's set currently, obviously we're in a bear market and we recognize that. And so accumulation is the key to the game right now. So we're going to accumulate the assets, and the tokenomics as they stand currently are there's 50% are rewarded directly back to the NFT holders, all equally, all evenly distributed amongst the 10,000 NFTs. 45% of the fees or of the earnings of those validators and other mechanisms will go to a reinvestment strategy, right? So we're going to continue to multiply the assets. And then finally, there's 5% left that's necessary for us to help maintain the protocol long term. There's, of course, some expenses associated with this, and 5%'s enough to allow us to do so in a safe manner without really pulling any unnecessary funds more so than are needed to support. So that's what the tokenomics look like at the moment. Now, I will tell you, Nexus, what we wanted to do differently is lean on the age-old adage, right? That we take profits, right? Don't forget to take profits. So the time to take profits is obviously, yeah. Well, we've all been there. We've all seen an asset that we've held go to the moon and then held too long, only to regret it detrimentally, right? We've all done it. If you've been in this space for any length of time, you've experienced that. So what we decided is we're going to have a voting piece to our club that allows us. It's called a sliding rewards mechanism. So when we return to all-time highs, or if we're seeing the trajectory completely reverse and the community agrees, yes, we're in a bull market, things are going in the right direction. Well, now we're able to slide the reward mechanism up to 75% return of all rewards earned to the NFT holders, 20% in reinvestment, right? We don't want to reinvest the whole 45% at that time. It wouldn't make sense. It would make more sense for us to reward all the NFT holders at a higher percent, and then the 5% still to maintain the protocol. So as it stands, it's pretty simple, right? The validators and other mechanisms we set up, they provide a genuine yield. It's not a yield that we don't need other people to buy in, right? It's once it's set up and it exists. And then those actual rewards will then be provided back to the NFT holders, either between 50% as it is now when we first kick it off, or all the way up to 75%. And by doing this, though, it allows us to continue to scale the project long term. And those people that are truly passionate about it and believe in the future of the crypto technology in general, right? This could be a very lucrative opportunity in the future. At least that's what we're really hoping, because we believe in blockchain technology. Anybody that invests with us and becomes a club member, I would really hope that they believe in it as well, because that's the whole purpose behind this.
Okay. Run me through the process of how an NFT holder will go about collecting their rewards.
Yeah, that's a great question. So as a project, we are going to be providing two services. So earlier when we first started to talk, you kind of described us as a node management system. That's actually the first idea that we had when we started thinking about how to make a project. So you could think of projects like smart nodes or all nodes. That was what we were initially thinking. But then we started to change it a little bit, and we came to the model that we have today. So in order to answer your question, we have two services. Service number one is we service blockchain technology by creating validators, participating in staking pools, delegation, and on-chain staking. These mechanisms are created to strengthen those blockchains. It helps them run faster. It helps them validate transactions. It helps them strengthen their blockchain, and it helps lock up their tokens and liquidity so that they don't have massive changes within their system, right? So that is the first service we have. The second service we have are to the club members. So that service includes giving people access to our products and services that we've created. Our Discord, our website, the decentralized application that we're creating, all of those things that we are generating and creating for the project are part of that service. As an NFT holder and as a club member, you would purchase the NFT, you'd hold the NFT, then you'd connect it to our website and our decentralized application. The decentralized application would read your NFT and the data, the metadata of that NFT, and it would recognize that you are the wallet holder. It'll be able to see your wallet, and it'll tell you what NFT you have and the attributes and all of those things. You'd be able to interact with the application and claim rewards when they're available. And part of our service and part of what we have as our club is we have a $1 a month club membership fee that you pay, and you'd be able to pay that inside of the decentralized application as well. So everything would be operating on chain, and it'd be operating within our decentralized application, and that's how you'd interact with our smart contract.
Okay. All right. Now we're going to get into the deep cuts. Can you please, for all of our edification, describe the internal control system for the Bourbon and blockchain treasury? It's okay if it's still being designed. That's something I understand, but I do need to know how it's going to look.
Sure. Hey, I'll start us off, Draco, and you can fill in any gaps. So to start off with, security is kind of a foundational perspective that we've taken. More so Draco than myself, I would consider him to be first and foremost a security expert. He's been contracted by many projects along the way, in fact, to give security lessons or provide advice, be more of an advisor from a security perspective. So he's just a specialist in that. So actually, our very first partnership nexus was with Grid Plus. I would hope some in the audience are familiar with Grid Plus. They're a hardware wallet service or company. They make a pretty incredible hardware wallet. It's a unit to where essentially each individual wallet you hold is on like a credit card style device that you plug into this unit, and it's has military grade encryption. It's a great piece of technology. And so we partnered with these guys right from the start because one thing we want to do is secure funds more so than anything else to make sure the treasury is 100% protected. So Draco has a pretty good map of it, but essentially we're taking each chain that we're providing these services to, right, is all those specific funds of the treasury are going to reside on their own individual wallets within the Grid Plus hierarchy system, right? So it's very secure. It's a great way for us to manage it, and it's also, heaven forbid, if something were to happen to the treasury, right, by splitting up the treasury funds amongst all the different chains that we're operating within, it protects all the rest. It keeps us from intermixing and intermingling. It limits the damage to be done if they were to break the encryptions somehow. So, and just to go a bit deper, and Draco, I'm going to let you expand on that because you're way more articulate than I am in this space. But
No, you're doing a great job.
What I will say also, when it comes down to the validating, okay, the physical validating of when we stake those assets and we set up the validator nodes in support of the blockchain, what we have done is we have secured, at this point, 4 enterprise-grade servers. We have them fully fitted and kitted. Draco knows all the specs of them. It's pretty incredible that we were able to get our hands on this. It allows us to help maintain things at a much higher level, and they will be hosted in a secured server farm in which we have a contract set up with, where the uptime is much greater than what we think we could achieve in a household of some type, or even using a VPS, right? So we've actually invested in infrastructure to help us manage this, and it allows us the anonymity to be able to manage this at a much greater level, I believe. So, Draco, I know you have more to add on.
Yeah, I think you did a great job. When it comes to the treasury specifically, there will be a treasury wallet. It'll obviously be one wallet. The only thing that will exist in that treasury will be the initial funds from the mint, and then those funds will be dispersed out to all the various projects that we're going to be supporting. Once those funds are on those various projects and different blockchains, they will then exist on their own wallets. So like, for example, if we purchase 20 Ethereum nodes, now those funds would be on Ethereum, they'd be on a different wallet, and they wouldn't be on the same wallet as the treasury. The same things with the reward contract. The reward contract, the only thing that's going to be on the rewards contract is going to be the rewards. That's it. So in the event that that smart contract had a issue, if it was breached, first of all, our smart contract is created to where we can pause the smart contract based on certain levels. So if something were to happen, like if a large amount was taken or it breached a threshold that we weren't aware of, it would pause the smart contract and we'd be able to address any issues. And again, the only funds that would be on that smart contract would be the rewards. So the only thing that would be at risk are the rewards for that month or whatever that are on that contract. None of the other blockchains, none of the other assets, none of the other validators, all of those things would not be directly connected to that smart contract. They're decentralized. So you would have to be a hacker that would be able to hack several different hard wallets at once. And up till now that we're aware of, when it comes to people cracking seed phrases, that's not something that's happening. Smart contracts are weak points for projects, but seed phrases are not.
Okay. All right. That brings us to Sarge's question about FTX concerns. What do you guys think about the crypto industry as a whole in a post-FTX implosion environment where many of us are still themselves feeling some of this contagion as it gets further and further out, like a spider web that just keeps expanding?
Yeah, that's a great question. So it's crazy that you guys are asking these lines of questions. These questions line up a lot with what we have talked about in our own group. So on the 13th of this
We're
month,
not so different, you and I, sir.
right? I know. Well, we've had our own conversations, right? On the 13th of this month, we actually sent out an announcement to our entire group discussing this a little bit. You can only write so much before you lose your audience, right? So just quickly, I'll give you the bullet points of what we put out there. It was an introduction, talking about FTX. And what we're going to be doing to make sure that we aren't going to fall victim to that type of issue, and the steps we're making to improve our project compared to some others. So number one, we will own and operate our own servers to host our validators. So Mr. Maverick just talked about that. This will allow us to control our servers, in that we're not in the control of a virtual private server third-party host. If we open all of these on, for example, Google or Amazon, technically they would have control over the uptime or the validity of those validators, and they could shut them down at any time. So by running our own servers, that allows us to be more independent, and it gives us a little bit more optimal uptime as well. Because if you've ever run a VPS, they do go down. Sometimes it's short,
Yes.
but they have little like blips that they have. And depending on the validator or the system that you're using, sometimes you actually have to physically go back in there and get it back and started. By running our own equipment at the server place that we are working with, we're looking at a 99.3% uptime with diesel generator backup, with battery backup in between the diesel generators and your typical electricity. So our downtime is going to be minimal, if at all. Number two, we will participate in on-chain staking and validation. What that means is we're not going to be staking third party. We're not going to be giving our funds to a BlockFi. We're not going to be giving our funds to Coinbase. We're not be giving our funds to FTX in order to stake. We're going to be doing on-chain validation with our validators. We're going to be doing on-chain staking directly to the smart contracts, or we're going to be doing on-chain liquidity pools where we keep custody of our treasury funds. So we're not going to be utilizing third parties. Number three, we're going to be holding our funds on a decentralized exchange or a centralized exchange for short-term only. Obviously, we have to do swaps and things of that nature. If we can't utilize certain decentralized applications, depending on the applications that we're utilizing, there will be times where we have to send funds to a decentralized application or a centralized application in order to swap those funds. An example of that would be utilizing projects like KuCoin or centralized exchanges like that. We will try to avoid utilizing central exchanges, but there is sometimes liquidity issues where if you're going to swap a large amount, you have to go to a centralized exchange in order to get the actual liquidity, or they'll charge you a lot of funds because they don't have it and they're going to have to swap it for you, if that makes any sense. But we will never store our assets or our treasury on a exchange long term. We have this set up to be decentralized and have our own wallets. and all of our treasury assets will be sitting on our own hard wallets, and everybody will see those hard wallets. Well, everybody will have those the hard wallet addresses, the wallet addresses, so that people can see them and audit them as they want. And lastly, we will not operate our validators and other state assets within our smart contract, like we talked about at first. We do not believe that putting all your eggs in one basket is a sound security decision. So if we operated all of the validators and had the treasury and had the rewards within the smart contract and something were to happen, we would lose everything. There's nothing we could do about that. That's why we're taking a decentralized approach.
All right.
Hopefully that answered your question.
Best you can, I believe. That leads to our final question from me before I kick it to the community. After the implosion of FTX, a great deal of investors are risk avoidant like never before in a space that, up until recently, was traditionally saturated by the risk hungry to a highly risk averse investor who may even be skeptical of investing in traditional stocks at this very moment. Give us your very best sales pitch as to why this very real risk-averse investor should invest in a club membership.
Ooh, that's a good one for Maverick.
I'll give it my best shot, Nexus. That was a great question. So I will say, just to start off with, that this is the best time and the worst time to launch a project like this.
Okay? Yes, sir.
We know
Can
that.
confirm,
this is the best time because all the assets that we're targeting right now are at a cyclical low. And it may not be the very bottom, but we're pretty confident that the low that we're at is somewhere in the ballpark, right? So it is the best time to accumulate these assets. But to what you just said in your comments, we understand that it's an uphill battle to sell out the project. We're fully aware of that. What I will say is that we are full steam ahead, regardless of the NFTs, how fast they sell, how many they sell. We have the infrastructure established. The reward mechanisms are not going to be changed drastically based on the amount that we sell initially. What will change is the manner in which we're able to spread those across many different blockchains. So we'll have to be a little bit more strategic. Also, we've pulled in through a few partnerships some strategic individuals, like Vaporfy is one that we just announced. Just had an AMA with them just yesterday. It went really well. We actually have an advisor on our team. Many people may know him as Steven the Calculator Guy. Very intellectual guy. I would say one of the best in our industry to unlock real value. And this individual is going to be helping us and assisting us with identifying the best opportunities out there for the community, because he's a wealth of knowledge and we believe on leaning in those types of people, right? People that have that vast amount of knowledge to help you make a good or wise decision. So what I'll say is, we've all been down the road of throwing money at all sorts of things. In a bull market, it feels good. You really can't miss in a lot of cases. I think what we've all found out within the last 9 months is that it's not realistic. It's not sustainable. It's going to be short term, and more people are going to get hurt from it than that are going to benefit from it. We wanted to create something that transcends that idea. Okay. So this is not a get rich quick scheme. This is not. These are realistic rewards that are being produced through real mechanisms, not taking from one person to pay another. And so this is a true business per se. We're operating as a club so that everyone that participates and wants to be a part of this can absolutely share in the long-term benefit. We have a roadmap. That roadmap internally amongst ourselves also includes kind of a 10-year trajectory and what we want to accomplish within that time. So I can tell you that we're being as honest and transparent with everybody as we can, because all of us are here for the long haul, and we will always do what's right for the communities. I think it's much deserved. We all honestly deserve more in crypto, and we need to start asking for more out of the people that we, trust with these types of projects. So, Draco, do you have anything you'd like to add?
Yeah, I'll add two things. That was great, by the way. I think you nailed a lot of that. And one thing that I'd like to add is we're not reinventing the wheel. So I want to be very clear with everybody. There is no token. We don't have a token. There's enough tokens out there. There's no need for any more tokens. We don't have a token. So we're actually providing our rewards in USDC initially. As we grow and we can create a larger treasury, we'll be able to provide native token rewards such as Polygon and Ethereum, and we'll kind of go from there. But initially, we're going to start with USDC because we won't have enough in a treasury system for you to claim native tokens, if that makes sense. If we offered that, then that would be kind of concerning. Like where are those funds coming from? I could tell you where they would be coming from. They'd be coming from the investors, right? The way that our models are set up, not $1 of funds that come from a club member are put back out as rewards. All of that money goes right into investments. So we never recycle any type of rewards. It doesn't work that way. That's a Ponzi scheme. We're not going to do that. Also, we're not reinventing the wheel in this aspect of yield generation. When you open a validator and you run a validator, that proof of stake mechanism already exists, and they've been running on several different projects for years now. We're not reinventing that. We're just participating on it on a different scale, a larger scale. And as a club member, that gives you access to several different blockchain technologies instead of just one. So one of the questions in your chat was, why would I do this instead of just staking it myself? I have two answers for that. Number one, if you took $500 and staked it to one project, you would earn rewards from that one project. If that project does a 3x, congratulations, you did a great job. You can claim some of your rewards and you can move on, right? If you stake it, you're going to be staked at a certain amount of time as well. So that's something to consider depending on what blockchain you're working on. With this project, that $500 for that club membership actually gives you exposure to several different blockchain technologies. You're forced to take profits because that's the way the model works. We take 50% profits and disperse them out to members constantly. So you will be taking rewards, but you'll also be reinvesting into the market as a club. So as you claim rewards and you take profits, you're also creating a larger treasury that's continuing to reinvest into the market and get bigger. So that benefits everybody that's participating. Long term, this is a very strong and a very realistic proposition to creating additional rewards long term.
Okay. Excellent. With that, we shall kick it right into the community questions. Now, I always set my questions up to get the community to be thinking and be formulating while I'm giving mine.
Absolutely.
And generally, that sets up some even more interesting follow-ups to what I've already asked. And as always, if you guys have additionals, that's okay. We can, if we're lucky, we can get to those with respect to the team's time, because I'm always trying to leave people an escape route, a trap door, if you will. All right. First question from Arthax. Why have you thought that people needed the product in the form of a long-term staking option alongside access to a real bourbon distillery? I believe he's referencing the bourbon tour and barrel pick that you guys were talking about in your documents.
Yeah, absolutely. I'll answer the first part of that real quick.
Yeah.
We were just talking about
Yeah,
it,
we
so
were.
that kind of breaks right into it.
Yeah.
So most people that are in cryptocurrency sector, when they first get in, they just want to buy let's say Bitcoin and Ethereum, right? That's all they really know about. But the longer you get into this ecosystem, you want to start to successfully operate and support cryptocurrency if that's something you believe in. But what you'll find out, especially if you want to do validation, is that there are barriers to entry. And those barriers to entry are typically, it's expensive to purchase the tokens in order to operate or participate. It's expensive to buy hardware. And by the way, we look at this as a long-term investment opportunity. This is a long-term project. If we wanted to just run this for a year, we could have done VPSs, but it would have been very expensive. we're doing a very expensive option up front and buying our own servers so that we can run this ourselves. So it's expensive to buy the equipment. It's expensive to have the tokens. It requires technical knowledge in order to set these validators up. You have to know some coding.
Yes.
And on top of all of that, you have to make sure that these things stay up. They don't stay up on their own. You have to ensure that the uptime is very high. So people aren't going to want to do all of those things. They just want something that's simple. Going back to our first thing that we were talking about providing a service, we're not just providing a service to blockchain. We're doing all of those things for the club members. We have the servers, we have a team of individuals, and we have ourselves, the executive team, and a technical team that will operate these validators to make sure that they stay up and running. We have everything set up on our end to conduct all of these models, so that all the NFT holder has to do is pay the $1 a month fee and claim their rewards. And that harkens to another question that was happened, just so I can answer both. Someone said it's very expensive to run all of these nodes. Do you think that we'll earn enough money as rewards? We run all of the nodes based off of the $1 a month service fee. That's really all we need in order to keep the project running from that aspect. So outside of the $1 that you pay for the service fee per month, that 50% of all of those rewards go directly back to NFT holders. So yes, there are going to be rewards. And the second part of the question was access to Bourbon Distillery. It's an option. If people don't want access to that, it's just like a bonus, right? It's not going to hurt you or benefit you more if you don't want to access that. So if you're not interested in bourbon, or you can't participate because of your age or because of the area you live in, or whatever the restriction is, that's not going to take anything away from the rest of the protocol.
Okay. Arthax's second question: why did you decide to price the NFT mint at $500? And then he's got a follow-up after that.
I think Maverick's got that.
Yeah, I can kick that off. Hey, look, $500 is kind of an arbitrary number. What we've done is we've looked at other projects that have tried to accomplish this same type of structure, just maybe in a different manner, right? And we've seen what works and what doesn't work. And we feel like the $500, at least when we initially began, was a great starting point, right? And it allows us, right, if we were to mint out the entire project, to be very diversified for all the club members, which I think long term is a huge benefit, because, you know, some are going to do okay, some are going to do great. The more that we're able to access, at least the top tier, chains that we believe in, we feel like that the long term proposition is just there. But I would like to say, Nexus, what we've done here recently is we've listened to our community, because some of our community they've offered up a lot of opinions and advice. And one thing that they really were wanting was more of a tiered style mint. Hydro Wells did it. There's several others that have done a tiered style. So since maybe the initial read through our white paper, our executive summary, we've changed it. So we're going to be minting in 4 different tiers, okay, in 2,500 NFT batches, essentially. The prices are going to start at $450 for the first 2,500 NFTs. The price will then go up to $475 for the next 2,500. Then they'll go to $500 for 25 for the next 2,500 NFTs, and finally $525. So it allows us to, reward the individuals that are long-term, that are looking at this as a long-term value proposition. They were here from the start, supporting Bourbon blockchain, to actually just capitalize on it a tiny bit more. And again, it was us just listening to our community and doing our best to try and make that happen, and trying to satisfy the group to make sure everybody feels like they can participate and get in at the value proposition that they feel is best. So I hope that answers that question.
Okay.
Good questions.
Yeah, his follow-up to that would be if you were adding or expecting to add any other options to join the club other than, say, paying the USDC on Polygon.
Yeah,
right now, Oh no, go ahead. Finish your question.
No, I was just gonna say we've talked about that in the past, Nexus, and initially we're focused on establishing it the way that we've already highlighted, but for the future, that's something that we have discussed and we are looking at. I don't want to get into too much detail, but what I will say is we also have what's called a buyback and burn mechanism that's going to be built into the protocol. And just to give you a high level summary of what that looks like, it's so whatever earnings the validators, let's just pick an arbitrary number and say the validators pull in $200,000 in 1 month. Okay, and we put a vote to the community and we say, hey, community, would you like to buy back and burn any NFTs off the open market? Then if the community allocates, they say, yeah, let's vote on $10,000. We're going to use $10,000 of our rewards that are going to be reinvested to buy back and burn. Well, then those are purchased off of OpenSea. They're put into a burn wallet, and those NFTs no longer will accumulate rewards. Therefore, increases the percent of rewards across the remaining NFTs. Correct. So we haven't got it figured out 100%. But what we're thinking towards the future is, as we buy back and burn, perhaps creating some additional utility for people by reintroducing those to the market later on, just as a membership only. So if you're interested in just the bourbon and that's all you want to participate in, then those are essentially dead NFTs, but that NFT still represents your club membership. So hey, there's a lot of details still to work out there. I don't want to put the cart before the horse and promise the world, right? But this is definitely something that we're thinking through. But right now, I think the focus is just launching this and establishing the protocol in a healthy manner at this moment.
Okay. That raises a follow-up for me, kind of theme from Sarge's comment. You talk about reintroducing the NFTs later. That kind of implies that someone actually has control over the burn wallet.
Yeah, so they're not going to be burned, right? So we're going to remove them from the contract. So we would have the option to reintroduce them if the community voted for that. That could be something the community chooses not to vote for.
Okay.
Because so part of the reason why we're also not going to completely burn them is because we don't want to destroy them in the event that we want to utilize them, because we're going to also have our trademark, and we're also going to have all of our property rights to each of the NFTs. So we don't want to just destroy them. There could be a future use case, even if they're not utilized or reinjected back into the smart contract. They still could have use case outside of that.
Gotcha. Okay. All right.
And I did see Sergeant's message. He said the burn. I see it as nothing more than price manipulation and price control. And that's when you're talking about like projects with tokens, correct? But that's not what this is for. So when you're talking about a burn mechanism for a project like this, if people were attempting to exit the project or trying to sell NFTs, and the community voted instead, yeah, we'll buy some of those off the market and we'll go ahead and put them in a wallet where they're not earning rewards, right? What that does is that makes it the pool of individuals that are receiving rewards, it makes it smaller. So instead of having to pay 10,000 NFTs, an equal amount of rewards across the board, now we would have 9,999. So those rewards that are being purchased by the actual project would now be dispersed back to all of the other individuals in the project.
Okay. Usama Anwar asks, will there be any bug bounties moving forward for people like me and others? Many others, actually.
I've never thought of that. I guess we could. I mean, if there were problems with our project, if there were loopholes, if there were issues with our smart contract, we would definitely want to know about that. So I guess the answer would be, and Maverick, obviously, I'd want your input as well. I would say that's not off the table. I guess we just haven't really considered that.
Tentative possibility. Hey,
Yeah.
That's what I love. I love it when people come here and they get exposed to ideas they didn't even themselves consider. That's how I know this show works.
That's exactly what just happened. We've never considered. I mean, have you considered that, Maverick?
No, I sure haven't. It's a great idea too. It really is. It's something that we would maybe just need to dive into a little bit more. So if anybody has like any specifics on how they could assist or they would like to participate in that fashion, maybe reach out to us
Yeah, that'd be
personally
great.
in a DM, and we can discuss. I really like the idea.
Awesome. Awesome. And his second question was, what would be the backed assets for your project so that it wouldn't get rugged so easily?
So it wouldn't get rugged. So those are two different things, and I guess maybe I don't understand the question. So
Well,
number one,
we
go ahead.
all have different perceptions, right, when it comes to watching a project rise and
Right.
fall. Obviously, there's a number of both market-related forces and internal control-related forces that can result to the downfall of a project. So I believe in this context, he's asking less about whether your all's treasury is going to be internally compromised and more about the price floor of the NFT series, is what I believe, but I could be wrong.
Yeah, well, we can't control aftermarket sale.
Naturally.
Right, but I guess I'm trying to think of the best way to answer that question because I still feel like it's two separate questions, but I'll try to answer it.
Well,
So
in
number
a way
one-
it is, but yeah,
Okay.
I see what you... Yeah.
Yeah, so we initially we talked about how the project's decentralized in the sense that not one attack or not one threat would be able to take down the entire project. For example, Mr. Maverick was talking earlier about having rewards available for people. Let's say hypothetically that we claimed rewards for a month and we had $50,000 sitting in the rewards contract. If that was if something happened to that, if that was compromised, that's all that would be compromised. 1 month of rewards would be compromised, not the entire project, not all the validators. So based on the way that this project is set up, it's decentralized to the point where there isn't one attack vector that would take down the whole project. If the smart contract was compromised to the point of no return, I mean, the project could just open a new smart contract if we had to. Like, there's ways around that. There's ways to be nimble around that. So all of the treasury and all of the rewards and all of the projects aren't sitting in one area to be attacked, if that makes any sense.
Yes, I do
then
believe so.
I'm trying to think of how to answer the second part, unless you got it, Maverick.
No, I don't have it, Draco, but I will say this, like, Nexus, kind of to your comment about like protecting the price floor of the NFT. I will say that these NFTs have inherent value backing them, right? They're not just a picture. So we've done a lot of research before we ventured down this path, and we've looked into many other projects who have maybe not done it in the same fashion, but they do have real assets backing them. And those NFTs have done very well, even through the bear market that we're in now. So, although we can't manipulate, we can't do anything about the floor pricing of these NFTs. I will say that based on the models that we've seen, they're all highly valued even after the fact. Why? Because they produce a tangible value, right? They produce tangible yield on a monthly basis. So, hey, we can't promise anything, but I can tell you, I feel very confident that the floor price of these NFTs will hold up quite well. And I could absolutely show you some of the projects that we used as kind of a case study to analyze it.
Well, theoretically, I've seen some NFT projects that were wealthy essentially guarantee a certain price floor for their communities to the point where they're essentially saying, guys, we did so well. We're flush with cash. We're just going to buy back everything that hits this level or below.
Yeah, no, that's not the intent as of now. But I will say, Nexus, this is a club, right? Everybody that has an NFT has the opportunity to voice their opinion, and we can also take things to vote for the community. So if that was something they wanted to do, let's just say the floor price, all of a sudden it went underneath $500, okay? And the community said, hey, no, we want to use right now is the proper time to start buying back some of these NFTs, right? It's a good use of our earnings, then we could absolutely do so. But as far as like manipulating the price and holding it up, specifically ourselves, that's not something that we plan on doing.
And I think that I can try. I think what Usama was asking is, what are we purchasing and how strong are they for us to say that they're not going to rug themselves and destroy our project? Yeah.
Yes.
So so we have a document that we can share with you guys. You can also see it on our Discord. It's a guideline, right? So we're going to be investing mostly into the top tier cryptos, right? So 60% of our allocation that we're going to be doing are going to be the stuff that you would consider boring, right? Ethereum, BNB, ADA, DOT, Matic, AVAX, Link, and Atom, right? Those are the projects that have been around for a little while, some of them longer than others, but they don't offer a crazy amount of rewards. And when they move in the market, they're only looking at 3, 5 to 10x at the most, right? Although that doesn't seem like a lot, those are much safer plays than something if you were to look all the way down at, cryptocurrency number 3,000. Yeah, it might give you a 400x, but it's super risky to get into. So, I think where we're at is 85% of our what we're going to be putting into are within the top 100 cryptos. So the rest of it, a very small portion, are going to be flyers, right? So that we can get high rewards and high risk, but it's not going to be the vast majority of the project. 85% or more, potentially, depending on the market and when we inject the funds, are going to be in the top 100 crypto. I think that might answer your question. We're not putting all of our money into, God knows, Shiba Inu. We're not putting it into Shiba Inu. It's just not going to. That's not how we're operating.
Gotcha. Yeah, that's the substance of what I believe he was asking at the tail end of that question.
Sorry, Sam. I didn't mean to butcher your question.
No worries. No worries. All right. Next user, Master Halo 40. Always good to see you, Chief. I am interested in knowing more about how your reward distribution system works through NFTs. How can I buy one, and what are the use cases and benefits? Well, I can actually kind of take that, having sat this far. These gents can correct me if I'm wrong. As far as I understand it, their reward system works through collecting together a pool of assets that are working to support, through delegated nodes and various other services, aspects of the crypto industry as a whole. And the use cases are going to be more numerous as the team here supports more blockchains with more staked nodes and more assets. So those distributions will then come once a month to holders of the NFTs. Do I basically have that correct, as short as possible?
Was that an application? Are you applying to be on the distribution portion of the project? What's going on here? Oh, that was great. No, that was great. I think you hit it right on the head. You buy the NFT. It's in a wallet. You connect that wallet to the DApp. The DApp will tell you what your NFT has earned in rewards during the time that you've held it, and you claim the rewards.
Okay. All right, Master Halo's second question then. Is there any way to see the treasury that's going to be giving the rewards to the Bourbon and blockchain stakers? If yes, where can I find it?
Yeah, Maverick's got this one for sure.
Yeah, hey, I'll take it. Yeah, no, this is something that is 100% foundational to what we're building here. And what I would do is I would direct everybody to the BnBSclub.com website. And under the About section, if you scroll all the way to the bottom, you'll see a tab that says Transparency, and it says Soon. All right, so we're going to have it built out within our website to show our smart contract, our treasury, where all the validators and how they're performing and their uptime, the total rewards that have been made and are available. So transparency is key when you're doing something like this. I think it's something that we all deserve and we're not used to getting. So I really feel like this is going to add a huge layer of trust within the community, which we're working really hard to build and we'll continue to work hard to build. So yeah, check that out. You'll see where we have it. It says Soon. When you click on it, nothing happens. Well, the reason is because we don't have a treasury yet, right? So
Gotcha.
we've already have the website built out. We have a lot of elements already up and going, and transparency is just one that's going to come immediately following a setup of the actual initial mint. So keep an eye out on that. But yeah, that's where you're going to find it. It's going to be open source, available to for everybody to see and audit themselves.
I'd be remiss if I didn't add Master Halo's additional comment. He wrote, I think it is very important to show transparency when we talk about these things and more in the market conditions that have recently occurred. And I definitely don't disagree with that.
Yeah, all of our wallets, everything from the Mint wallet to the Treasury wallet to the Rewards wallet, all of the wallets that are going to be holding the various assets and validators and whatnot, all of those are going to be publicly posted, and you'll be able to look at them and click on them and interact with them in our transparency section, and you'll be able to conduct your own audits. And we'll also be doing our own audits that you can look at and verify, where we say, this is what we've collected, here's where it all came from, here's where it all ended up, and here's what the rewards were. And we'll be doing that, on a monthly basis, because every single month we're going to have to claim and put those into the rewards contract.
Okay. Alrighty. Next question comes from Lucy Cutie, #bedass. 1. A membership-based club dedicated to supporting and strengthening blockchain technology, end quote, sounds very broad. How do you plan to support and strengthen blockchain technology? Are you meaning any blockchain or Polygon in particular?
Yeah, I can. I'll answer that one. So we've given you a couple of examples, and I think that question might have came up before we gave that list. But no,
Correct.
not all. We can't participate with all cryptos, right? We can only participate specifically when it comes to on-chain validation and whatnot. We can only participate in proof of stake because that's the model that we can support with the way that we've set this up. Or liquidity pools, we can do those as well. But we can't do, like, for example, proof of work. We wouldn't be able to support proof of work because we wouldn't be able to return a yield from that, if that makes any sense. So yeah, technically, as long as it's a proof of stake network, we'd be able to participate. But depending on how new that proof of stake network is, how long it's been around, what its utility is, and how good it works, all those type of things, is how much we can, put into that proof of stake network. One of them that we're looking at right now, and that we've been looking at for several weeks or months, is A0, and we could be looking at something like that, right? But that's a project that is not proven, right? So we wouldn't be able to put 30% of our project into that because it's not a proven asset, if that makes any sense.
Absolutely.
Yeah, it's definitely a broad statement, right? But it's kind of our keynote, right? That's our mission statement, and we utilize that mission statement to help us make decisions moving forward. Helps keep us honest on what we're focusing on. It also sets limits for us as far as what's in scope from a club member or a club investment strategy. So that's really key for us, is it kind of has to meet our mission if we're going to participate. We've had like a lot of discovery calls with other companies and organizations since we've started building this project, and we've come across some that are good fits, and we're going to be able to support them in some form or fashion. And we've met with some that honestly kind of fell dead because it didn't really meet our mission statement, or there was no clear path on how we could make that work, still retain our assets, to remain in control of our own future. So it is a broad statement. We recognize that, but it's the mission statement that kind of guides the decisions that we make to make sure, we're doing the best job at controlling the funds and not getting degenerate with our investment methodology either.
Okay. That leads pretty well into Lucy's second question, which, I love this question, Lucy. Personal bias coming in. Why are you utilizing NFTs if you're keeping it simply for the club membership? You could do that with any kind of governance tokens as well, or am I missing something here? Lucy asks.
Yeah, so we do not want to have a token. The tokens, when it comes to having specific type of tokens, what that can do is it creates a whole slew of problems, and we can name several projects that have attempted that and it failed. Yeah, you can try to keep doing what's been going on in the market and what other projects have done, and a lot of them have failed due to inflation, due to printing, due to burning, all types of different mechanisms that they've tried to utilize. We didn't want to do that. We don't have to do that with the way that this is created, because the yields that we're getting are coming from other assets that we're going to be collecting and that we can just swap to a stablecoin or provide the native token. So we decided that the NFT route actually helped, but it also keeps it so that the individuals that are going to be claiming and collecting rewards, we can actually cap that to 10,000. It doesn't go above that. We can control that mechanism by having a set amount of NFTs. So there will only ever be 10,000 NFTs, 10,000 potential club members, and that's it. So that means that we don't have to pay 20,000 wallets or 30,000 wallets. The only amount of wallets that will earn rewards 5 years from now or 6 years from now are going to be 10,000. That's it.
Wow. Okay. Element asks, you have a lot of blockchains you plan to add for staking opportunities down the road. You've also mentioned how supporting DEXs themselves will open doors to these blockchains. To confirm, you will be able to receive rewards in those currencies.
Okay, so yeah, if we were to, for example, participate in, let's give an arbitrary blockchain. Let's say Matic. If we are validating for Matic, we would earn rewards in the native token, and then we would take those rewards from the native token. We would send them to a wallet. We would convert them to stablecoin, and they would go into the rewards wallet, right? Now, let's say the percentage of rewards for that is 0.5%. That 0.5% is just what it's actually looking at is the percentage you earn in Matic, not a dollar amount, right? So that doesn't have anything to do with ROI. It doesn't have anything to do with the amount of actual currency or the value that we'd be getting. It's just the percentage of Matic that we'd be earning, and we would then take that. So like, let's say if we were participating on the Matic blockchain and we got 10 Matic tokens, and right now those 10 Matic tokens, let's say hypothetically, were $10. In a bull market, if Matic goes up to $5 a token, now that would be $50. Does that make any sense? So it would be a lot different than where we're at today, and that's where that token appreciation comes from. When it comes to the DEXs, the only type of liquidity pools that we're looking at operating are one-to-one stablecoin liquidity pools. So the rewards or the participation and mechanisms that we'd be earning would be in stablecoin.
Okay. Yeah, because the elements. Oh, yes, Sarge.
Just when you go ahead with your train of thought, and I got a follow-up question for with Lucy's there so I don't lose that train of thought.
Oh, sure. Yeah, no problem. I was just gonna say that. Well, actually, go ahead. Hit us with your question.
Well, so he kind of explained that, and like at that point, it reminds me of like Blade and Barrel or Mystery Tackle Box and those are. I'm just going. I mean, I would never purchase those because I could buy the same thing for a reduced cost anyway. How do you guys differentiate? When you say there's going to be a certain amount of members, taking those rewards, how do you differentiate yourself from like one of these mail order companies that gives rewards that aren't that great?
Yeah, I'm not familiar with that, with the company that you're referring to, but
I think I know what he's talking about.
Blade and Barrel is okay, let's say you're into guns and knives and you purchase, let's say you spend $1,200 to be in the club for the year. Every month they send you a box with suggested MSRP for a bottle of bourbon, a cigar, right. But they're hyperinflated because it's more of the manufacturer suggested price, but not what you could order from Amazon. Like I might get a hatchet for, let's say, they'll say its suggested price is $40, but I can go to Amazon and order that hatchet for $40.
Right. I see what you're saying. So, and are you applying that to the aftermarket utility or the on-chain utility?
No, you just said there will only be so many members to be able to get the rewards, right? At that point, if you're playing for a club,
limit of 10,000.
you're nothing more than, you know what I mean? You're just you're like it's, you know, as a club element there, it reminds me of Blade and Barrel and Mystery Tackle Box or Pajama of the Month or whatever, right?
Yeah, there was a number of companies that have tested this model. Not all of them have been successful, but a couple of them have been. So I can't say the model doesn't work.
No, they're very successful. They're extremely successful, to be honest. But
there was one in particular that catered to nerds, if I recall. I can't remember what it was called, but it would essentially send you a package of different themed merchandise from various intellectual properties, usually hot in the moment, and you never knew what you were going to get in the box. And they would tell you the odds of you getting certain cool and rare items, with there being a significant chance that you might get, a t-shirt most of the time.
Right. Yeah.
And I do want to say, I'm not trying to just harp at you guys, because like so far as NFT and an NFT or utility project goes, like we've done so many of these that are just absolutely train wreck. Like you guys have probably presented the information the clearest, and I like it. But when I start hearing like, well, you're going to get rewards, right? There's going to be so many people that can get this reward, like based on your NFT. It just reminds me of something. When people say, oh, I'm not trying to reinvent the wheel, but that wheel already exists in these subscription-based clubs that occur every month already.
And
I think there's a differentiation between the clubs that you're describing and what we're doing. The rewards that you're earning and claiming from this project are on-chain USDC rewards that are coming from the yields provided by the validation, delegation, and all of the different mechanisms that we're operating with. When it comes to off-chain utility, which is what Maverick was talking about earlier, as a club member, you will have the option or the ability to participate in doing barrel picks and purchasing various, bourbons and things that we work with our partners. But it's not something that you're required to participate in, and we're not going to just ship like a box with goodies to your house. That's not how that's going to work.
Yeah, that's a big differentiator there. Hey, this is not this is definitely not a mail order service. Honestly, what we try to do, we're passionate about bourbon, okay? It obviously it's in our name. And we've tried to tie the bourbon aspect into the bourbon and blockchain brand. And so to be honest with you, Chief, this actually happened pretty organically. We actually had a member of our community approach us several months ago. I'm talking in the infancy stages of us talking about this, and he said, "Hey, I get the blockchain part, but what about the bourbon? Like, what you guys are missing the boat." And come to find out through a whole lot of discussions, he's a master distiller. He's the co-founder of a distillery in Texas. Just so happens I'm in Texas. I drove down and met him, toured the facility, shook hands, drank a little bit together, and we discussed how we could actually introduce bourbon into this project as not a requirement, it's a perk, okay, if you're interested in participating. And so it adds the element of community, I think, is what we're looking for, okay? And I keep repeating myself when I go and talk to these different groups. But one thing I keep saying is like, hey, like in this type of market, in a bear market, there's not a whole lot to get excited about. We hear about FTX, we hear about all this negative news. We've seen every project we've been a part of over the past year fail horribly. Okay, there's not much to be excited about. But what can we get excited about as a community, right? Well, I guarantee you, alcohol will help. We can all agree that over a drink, we can have a good time. We can talk it out. We can remain a community, and it can help strengthen us. Now,
since you find folks,
no bourbon rewards, though, right? No, because that's what we've seen some of these before, where your reward would be if you minted low, you might get one day in a Lamborghini in Miami.
No.
I mean, but that's the thing when you say bourbon and blockchain, I kind of thought you guys would have like a bourbon reward or something.
No.
But you're going to be
now I understand where that comes from.
Because the NFT,
as like a member of the club, though, I get the privilege to buy bourbon from
at a
someone.
and we're gonna so what we're gonna do, so we can't sell you the bourbon. It's not right now, at least, right? Maybe in the future we could, but we're not a distributor. We're not a distiller, and we're not a marketer, right? So we
Yep.
can't do those things. A retail
Correct.
seller, if you will. So if we do get the licenses to do those things, maybe we can directly give you bourbon, right? But that's not what we can do now. What we can do is we can make a partnership with an existing distillery. We can purchase those barrels. We can get those things bottled, and people in the community can actually go to Texas and be participants in the bottling process. And then you can purchase those bottles at a severely reduced price because we're already purchasing those items. So as a club member, you'd be the only people that would have access to those because you're in the club, and you'd be able to buy a bottle of bourbon that would typically cost, $100 or more at a very, very, very reduced price. Does that make more sense?
Well, hold on.
It
Hold
does,
on.
and I think that was one of those problems where we had with the car NFT group, because who's going to jump in a plane to go down and pick out a barrel of bourbon? Like, not me.
Yeah, no, we understand. There's going to be limitations there. I will say that we are working with distribution partners too, right? We're figuring out the distribution portion of this, and possibly NFTizing the bourbon and blockchains bourbon barrel pick to where we can actually get it in the hands of many of the members. So there's a lot of details still to work through. I can tell you that we've already kind of forged partnerships to make that happen. So, and we're going to continue working from that angle as well, because, hey, it's foundational to our name, right? And so I think it's something that people could get excited about and really enjoy over time. So that's kind of how we're treating it, and we're going to keep moving forward with that vision.
Okay, well, that brings up a very important question for me. All of that brings up a very important question for me, because I need to understand now, before I even continue, that we're all operating under the same definition of what bourbon is. So I want to hear, what is bourbon? Give me your all's definition.
Well, it starts with white whiskey. Okay.
Mm-hmm.
So it can range from single grain to 4 grain.
Mm-hmm.
It just depends on the distiller and their style. And
True.
then what defines it as bourbon is that white whiskey is then put into a brand new, freshly built barrel. Okay, it can't be used prior, and then it's aged in this, whatever it is. It could be French oak, it can be whatever style would they choose. But then that the new barrel, the fact that it's a brand new barrel, is what defines it as a bourbon.
Yeah, and the mash has to be 51% corn at a minimum.
Yep.
So if
That's
the
what I
mash
was
is
waiting
51%
for.
corn, and that's the number one portion of it, and then traditional bourbon is aged in wood casks. So
Yes.
that's what helps define the bourbon. Now, it can stay in there for various times. In order for it to be bonded, it has to be in a certain area. But those are all, just loose definitions of what bourbon actually is. But yes, we're going to be going for 51% or more corn bourbon.
Oh no, Lucy. I asked that with a very specific intent. My dear friends, there was one definition they were missing. You see, I know some people who are in the distillation business by virtue of being a former liquor clerk. And there are some people who would take an issue or two with the definition that they gave me. For the most part, I think they would agree. But just for the purposes of having a, fun internet disagreement about definitions and the way we talk about stuff, there's some distillers and some connoisseurs of fine whiskey in Kentucky in particular who believe that you cannot actually call your whiskey a bourbon if it didn't come from Kentucky. You can call it Tennessee whiskey or Texas whiskey or Colorado whiskey, but you can't call it bourbon. You could mimic the process to your heart's degree, but you cannot call it bourbon. Bourbon must be made here in Kentucky. And that's something that I always thought was curious, that they are so protective of that name, that if it was made using a perfectly applicable mash, that it's not from Kentucky, it can't be a bourbon. They're viciously protective of that name.
Yes, they are. But
and Hey, and I will add, in Texas, they were very careful about. They created a. It's called the Texas Whiskey Trail. Okay, just like the
Yup.
Kentucky Bourbon Trail, and
And
they
the
were very
Tennessee
careful that
Trail.
they cannot coin the term Bourbon Trail for that. Now, whether it's for that reason, I don't know,
I'm
but I
pretty
always thought
sure
that
it's
was
because
funny.
there's a bourbon trade association from Kentucky that is very wealthy and very powerful, and they will just sue anyone who calls their whiskey bourbon, I think is what happens.
You're probably right.
All right, cool. Now that we've gotten that hilarious semantic disagreement out of the way, just because I think it's culturally amusing, I'll move on to the next question. From Side Hustler, what makes you guys different than a Web2 hedge fund?
Oh boy, that's a good question for Maverick as well.
Is it? Is that a good one for me?
So
This bourbon is creeping up on me.
That's okay.
So yeah,
Hey, this. Go
no,
ahead.
I'll do the first part of it. So we're not a hedge fund, right? So what we are is we're a support protocol. There's been a lot of AMAs that we've done where we've tried to identify specifically what we are, and we're a support protocol. We're supporting blockchain technology and providing a service to our club members. What we are technically, we're a club. We're taking a pooled amount of funds and contributing to the blockchain, and we're doing that as a club. And the club itself is providing a service to those club members. So we are actually a club.
Yeah, and I would like to say the service piece is the biggest part, right? A hedge fund doesn't provide a service; they provide investment. This here specifically, all rewards are earned through providing a service to the blockchain. So therefore, it's actually more of a business type structure than an investment style structure.
I'm also trying to answer questions and type them out because I know I got to get going soon because we
Yes,
we
we're
actually
20
have
minutes
this
over time, and
It's okay.
really
no, it's
appreciate it.
okay. No, my kids are
You,
getting antsy because we're supposed to go to this like Christmas thing where there's you walk by all the windows for all the
oh yeah,
businesses.
yeah.
You know what I'm saying? So no, but it's all good. I'm trying to answer as many questions as I can by
We
typing
still
them
have
out.
a ton more, but I appreciate your time,
I'm
Chief. I
trying.
really
I'm trying.
appreciate it. Yeah.
Let's do a couple more real quick.
Alrighty. Question 2 from Side Hustler. Running validator nodes is often expensive. Do you think we investors can earn enough returns if you expose the money you raise and run multiple nodes?
Yes. So part of the reason that we will have our own servers is we can run up to 1,000 Ethereum nodes on one server. We can run 1,000 AVAX nodes on one server, and then we wouldn't have to pay uh, virtual private network fees or anything like that for having each and every single one. That's one of the huge benefits to owning your own equipment. And none of the rewards that we're going to be pushing back out are going to be affected by the cost of running all of these servers. That's part of the service fee. So that won't be taking out of the rewards that are coming back to holders.
Okay. All right. Next.
That's the great. That's the great part about owning your own equipment is you can scale at a much cheaper rate, right? If we wanted to open up additional
yeah.
validators with the VPS, it grows exponentially the cost. So this helps us control costs and helps us manage it at a much greater level, I believe.
Okay. Next question from Metamorphosis. Most of the projects in the crypto cyberspace have had a focus on Western markets, North America and Europe, whereas the economies in developing parts of the world, such as Southeast Asia, India, and the Middle East region, have been flourishing recently. What are your plans for those markets and users?
Yeah, we've actually worked with a couple different marketers and stuff like that to get some exposure to different markets. And it seems like we've gotten some of those. We do have a diverse community. I think that if you entered our community and spoke with people, there are people from all over the world. It's pretty darn amazing that we have people coming in from Australia, people coming in from Singapore, people coming in from all Philippines, everywhere. So we're obviously trying to market to anybody that will want to participate. but I will say that it's very difficult to market to individuals in different regions because they get kind of used to people that are in their region, or they get like favorites. But we are trying to hit those different areas because we want to be completely open to anybody that would want to participate in our project.
All right. And Metamorphosis' second question: what are the long-term sustainable value drivers? I believe in, because you guys don't have your own blockchain, right? This
No.
is being built on Polygon.
Correct. Yeah, we exist on Polygon.
Okay. So I guess then I'd rephrase his second question to: what are the long-term sustainable value drivers for your project?
Yeah, I think Maverick can answer this as well. But
Yeah.
if you believe in blockchain technology, that's what we're operating with. That's what we're supporting. If you think blockchain is the future, then you might want to support that and make it better. That's what we aim to do. And on top of that, people always ask us, is this like a 6-month or a 1-year project? No, our model and the way that we are developing this is, as long as blockchain is around, this model can exist. This is a real yield model utilizing existing proof of stake networks that is providing a real yield, and that we can provide real rewards to our club members.
Yeah, I would like to add, I think the reinvestment strategy, if you really put the pencil to the paper, and we've created some internal calculators. We don't want to publish them because, it's all speculation. But when you put pencil to the paper and you really understand the long-term trajectory of a project of this nature, it gets pretty exciting. So the value proposition is, I believe, is like, hey, look, number one, many chains are moving to proof of stake. I think many that are coming online in the future are going to be looking at proof of stake. Why? Because the green movement, right? ESG and carbon credits and being good for the environment. It's always a concern, and it's always coming back to that for proof of work style chains, right? So I feel like for the future, I think we're establishing ourselves in a meaningful, long way that allows us to withstand the long term. And that also opens up, I think, a lot of value proposition in the future for what hasn't even been created yet, right? So
Yeah.
it'll allow us to then expand into other opportunities. And I really feel like proof of stake is where the majority of those opportunities are going to exist. My opinion, of course.
Okay. All right. Next question from Django: how does a Bourbon and blockchain holder get profits from the project? I think I can answer this one. Boiled simply, they own a basket of stakes and nodes and other services provided to the blockchain that are at a monthly time converted to stablecoins that they can claim straight to the wallet. No problem. Okay. Question from Sammy: would it be totally decentralized, and will the identities of the people be in safe hands from the MNCs and government organizations? I'm not actually sure what he means by MNCs. I might need to double check on that.
Yeah, and I'll try to answer it, and this will probably be my last question because I do have to get going. But
Copy.
the best way to answer that is, the answer is yes. So we are going to be decentralized. We're not going to be collecting club members' information. So with that being said, though, if rules and regulations come out in order that would affect our project and would require us to go down the route of KYC, if that was what kept us from not operating our project, then yeah, we would have to go down the route of KYC if that were to come down. But at this time, nothing like that has been put into place. The way that we're operating this company does not require individuals to provide KYC at this time.
And he meant multinational corporations by MNCs. Yeah. Excellent.
Can you say that again? Can you say that?
Yes.
I didn't hear you.
Yes, he said he meant multinational corporations, but when he said MNCs. So, yeah.
Yeah. So we won't be providing any personal information to anybody at all, unless government regulation comes down and that becomes the standard, then we would have to pivot. But then people would have the option too on whether or not they decided not to, right? So if you decided you didn't want to participate or you wanted to get out of the protocol, that would be your option as well. That's part of the benefit of having an NFT. That NFT actually allows you the ability to buy, sell, trade, or exit the protocol completely if you wish to do so.
All right. Excellent. Well, hey, boss, we have a couple more questions. If Mr. Maverick could hang, I'd really appreciate it. But otherwise, thank you so much for your time. I know you got to bounce.
No, we were very, very excited to come over here and talk to your group. We know that your group has a lot of like-minded investors and people that take crypto seriously. We don't have all of the answers. We want to make sure that people understand that. We have learned some things in this conversation and things that we want to take a look at. Specifically, when you were talking about people looking at our project and maybe potentially looking at some issues or, some holes that might be in the project. So we don't know everything, but we absolutely are doing our best to make everything the best we absolutely can. We have a lot of experience in crypto with our group, and we've seen a lot of things come and go. And this model is a very good model for long-term sustainability. And that's why we believe in it so much.
Okay, awesome.
Yeah, and I don't mind sticking around for about 10 more minutes, Nexus. But thanks, Draco. Appreciate you you coming on with me as well.
Yeah, I really appreciate it, guys.
Thanks, Nexus, and thanks, Sergeant, and thank you to everybody in the chat. I really appreciate your questions. I won't be a stranger. I'll still be around. I'm in your Discord, so ping me if you have any questions. So thank you very much for having us.
Absolutely. And feel free to weigh in on the pins later on in chat for any thoughts on best questions. If you guys have additional questions
too, yeah. If there's more, let us know and we'll respond to them.
All right. Excellent.
Thank you, guys. Have a good night.
You too, boss.
See you, Draco.
Okay. Second question from Sammy. What made you guys choose to name the project Bourbon and Blockchain?
Yeah, so we're passionate about bourbon, obviously, as well as blockchain. We've all been involved in blockchain for several years now, and so it's actually a Draco's kind of brainchild when it comes to the name. Draco was a researcher, investigator, and a interviewer for a group called Cryptonaires. He actually, him and Grant Maddock both helped to found that organization. And so when they decided to break off and try and do, their own thing, this was the brainchild. So I'll tell you, in June, whenever we pivoted, and I think we announced in August that we were pivoting and going to a project-based community. It really, the name just made the most sense to stick with. Okay, it just did. It kind of defined us by that moment. So also tying it into the real utility, the real world utility that we're going to try to obtain, it fit the model, and we felt very comfortable and confident with it. It kind of rolls off your tongue, doesn't it, Nexus? Bourbon and Blockchain.
It does. It definitely
sounds like a country
does.
song.
Alrighty. Next question from Broke. What are your plans in the long run, as there have been many projects that would promise basically royalty to their NFT holders, stay active for quite a while, and then eventually rugged? Teal Deer, what's the sustain? This user's looking for the sustainability.
Yeah, so I think sustainability is naturally built into the protocol too. We talked about transparency a little while ago and how we're going to achieve that. Also, across us founders, our group, we're very close-knit. We've held each other accountable from the very start. I'm completely doxxed. I started this off with giving you my name and what I do for a living. It's not going to be that difficult for you to find me. I'm willing to go on video anytime. We've also got a Sure DeFi in and to perform the KYCs. So, transparency is key and foundational to what we want to achieve here. So, hey, look, I'm not sure what the future holds, right? In the unforeseen circumstances that one of the team members, one of us, pass away or something unfortunate like that. But I will tell you that it's structured in a way within our team to withstand the test of time, and it would be treated much like a real business, right? If we needed to replace one of us, there would be a hiring process to onboard them. They would have to meet the same criteria and KYC to continue on with the project. So I hope that answers the question.
Yeah. The second question is, where are you guys going to list the NFTs in the secondary market?
Yeah, that's a good one. So OpenSea, OpenSea is the largest NFT marketplace. It makes the most sense to house it there. And it also, I'd like to piggyback off of that. We've had a lot of questions. We haven't gotten one tonight about why Polygon. Well, the answer is that Polygon's very inexpensive to operate within. And the answer I've gotten back is people are like, hey, look, Ethereum gas fees are really low right now. It would be super, like if you did it on Ethereum, you'd get a lot more exposure. People have a lot more money on Ethereum. I'm like, yeah, Ethereum's great now. But what happens to Ethereum when we go back up to those all-time highs, right? Do you remember paying $100 transaction fees? Many of us do. So listen, it makes sense now, but if you're having to pay for a $1 membership fee and you're having to pay $5 to transact, it doesn't make any sense. Whereas Polygon's a fraction of a penny. So Polygon was a perfect fit for us. We believe in Polygon long term. I think a lot of people do, and it allows us the opportunity to not put or be an inconvenience in the bull market to the participants in the protocol.
Okay. Next question from Como Se Como Sa. You guys had the
Awesome,
smart... Yeah, I agree. I heard you guys have already had the smart contract audited. What company did the audit?
Yeah, so Assure DeFi, Assure is doing all of our audits for us and our KYC. So yeah, we'll have that fully open to the community and transparent for everybody. So we'll have all details published for everyone to review.
Cool.
I think it's Assure DeFi or just Assure in general.
And his second question is, I see on the roadmap in Q2 to begin voting for future expansion. How is the voting going to work without a governance token?
Yeah, so it's going to take place within our application. So we'll have the ability to identify how many NFTs everybody has and the voting power for each NFT. So when we put things to vote, you'll be able to do it directly through the D app. At least that's the plan for now. Now, I want to be 100% transparent though, Nexus. That's not going to be on the very first launch of the D app. Okay. That utility is going to be built after. So to start with, I do know that the voting will take place through a plugin that is connected in our Discord.
I guess the only question that I'd have about the voting is it going to cost gas fees to vote?
No.
No? Okay.
No.
Cool.
No gas fees to vote. Yeah. And so a lot of the voting is going to be all around what we do with treasury funds. As we continue to grow and we have new investment opportunities, what we've learned is like when you start something up of this nature, you have a lot of people come out of the woodworks with opportunities, okay? And so we plan on taking those opportunities, number one, making sure they meet our mission. They stick to the thresholds of what we are willing to participate in. And then we take it to the community if we feel like it fits that mission statement and it's a worthwhile investment, right? For the group to get in on. So yeah, those are the types of scenarios and votes that would be put up for the club members.
Cool. All right, and that brings us to our final two questions from Bongabyte. How long do you think it'll take before we start seeing returns from the notes, excluding how bad the market is, of course?
Yeah, so we put a tentative timeline on that of 2 to 3 months. So I will tell you that as soon as we feel very comfortable with investing in this market at this moment, right? We're not going to hit the bottom. So as soon as the funds are available, we are going to start deploying them. So it will happen. Obviously, there's some background things that need to happen. For example, when you set up a node and in the system, especially on your own private server, a lot of times you have to take a copy of the blockchain itself, and that blockchain can take a day, a week, sometimes 2 to 3 weeks in order to download that to your machine. So hey, there's going to be some dynamics to it, right? But we're going to be 100% clear and transparent. But yes, 2 to 3 months is what we're committing to.
Okay. And Bonga Bites, final question. How will chains be chosen for nodes? Is it a community research type deal, or is it a poll that you guys are going to put up after researching them?
Yeah, so our initial strategy is already published on what we're going to participate in. But then absolutely beyond that, it's going to be all based on club member vote, right? We're going to take a lot of feedback from the group. And like I mentioned earlier, Nexus, if it fits our mission, right? If it fits the core value of what we're trying to accomplish, then we absolutely can take it to the community as a vote. But we're also going to be very transparent too. We're going to help highlight and do the research beforehand and be like, hey guys, these are the risks. This is what's good about it. This is what isn't. Make sure we're doing our due diligence before we ever put something like that to vote, and then be very clear and transparent with the community what those risks are.
Okay, awesome. Well, that's the end of our set of questions. With that, before I let you go, I guess I'd want to ask you to take a minute to look at the pinned messages for this channel and see if any of these users you find particularly worthy of reward.
Ooh. I should have been paying attention to this closely as we were going through the questions.
Yeah, boss.
The one that stands out to me the most, and I'm not sure who asked this, but it was specifically about a bounty, a bug bounty.
Oh.
So whoever that bug bounty was, I think that one stands out.
That's Usama Anwar who asked that one.
Yeah. Okay. Yeah. So I think that one is the one I would choose.
Okay. Well, we got 4 more winners. You got any other winners?
Yeah. Lucy Cutie Badass.
Okay. All right. Get to typing these up. All right. So our first winner is Usama. All right. Yeah, Lucy asked a good question. All right.
Master Halo.
Yeah, Master Halo always does me proud. That's a good one. Good choice.
You know what? Side Hustler kind of caught us off guard with what makes us different than a Web 2 hedge fund. I can appreciate that.
Yeah, oh, certainly. All right. And then we got one more winner. We got one more.
Yeah, so I think I'm going to give the last one to Broke.
Ooh, good. He did ask a good question. I can't say I disagree. All right. Awesome.
Yep. So, hey, I'd like to say thank you guys for having us, everybody involved, for listening in, and for you two for hosting us. It's been great. It really has. We love getting in front of new communities and kind of sharing what we're doing. Whether you choose to participate or not, we appreciate the time regardless. And anybody that does want to participate, make your way over to the Bourbon and Blockchain Discord. Let us know that you're from the Wolves of Alt Street, and we'll get you a secure mint roll. So if you're interested, that day one, you'll be able to absolutely, for sure, mint at that starting value price of 450. So yeah, just throw that out there. The people and the groups that are for everybody that shows up, we appreciate you. And if you have conviction and want to participate, we want to give you the opportunity to.
All right. Excellent. Awesome.
Thanks for coming.
Yes.
Yeah, thanks, Sergeant. Yep, it's been a great experience. We appreciate both of you.
All right, excellent. Well,
So
gang.
next time we're gonna break out the guitars though, Nexus. I only sing country though. I'm warning you ahead of time.
Well, I got a couple of those in my pocket, but that's
Okay.
definitely not the majority of my repertoire. I'll just confess. I got some standards and some classics in my repertoire, though, because I got to, you know, given that I am from, you know, the bourbon capital of the world, I have to be able to play something for the folks around the campfire.
Yes, that's true.
Well, guys, it's been a pleasure as always. My name is Nexus, and this has been an AMA with the Wolves of Wall Street. We had Bourbon and Blockchain here today. Thank you guys so much for joining us for this show. My thanks go to, as always, to my team that helps me put this on. You guys all know who you are, and to the two gents from Bourbon and Blockchain for joining us for this, and of course, last but never least, the community who makes this show what it is. Thank you guys so very much. You guys deserve it. Absolutely. We look for more in the future, and I'll be sticking around for a little bit after this show to do my traditional after show focus testing, where I allow and enable the community to hang out and talk about the project and see what everybody thinks.
Awesome. Well, thank you, Nexus. Appreciate the time. I'm gonna take off, but again, just thank you everybody for attending and for you two for hosting us.
Absolutely, it was my pleasure, sir. All right, we'll be back on the Discord very shortly.